Joining me now to discuss are Barry James, president of James Investment Research, and Jim Bianco, president of Bianco Research. Great to have you guys both here on a day like this. Barry, I'll start with you. What's going on with inflation right now, with growth and with the markets, do you think?
I think, when we look at inflation, we've seen the rollover of any number of materials, from lumber to gold and now oil. So I think that is part of what is, in the equation. And we look at of course, the interest rates and, bond investors are saying, we're not worried about it. The weird thing is we now have real yields. The yield minus inflation is negative, and it doesn't tend to stay there for that long. So one or the other is going to be making a change.
All right. Jim, which of these do you think is going to be making the big change from here on out?
I fear it's going to be the stock market. I got a little bit of a different take. If you look at core inflation levels, you could take out lumber, and you could take out energy, you could take out all the commodities. Inflation is still as high as the overall headline rates as well, too. Yeah, the reopening trades like airline tickets and used car prices will come down, but shelter inflation is going up. So what I'm trying to say is we have inflation. It's probably going to stay. So why is the bond market ignoring it and falling it? It's all about growth. If you look at a ratio of the growth stocks, to, the reopening stocks to the S&P, it tracks interest rates. The reopening stocks have been struggling for the last couple of months, and rates have been falling. So this is all about a fear that the economy is going to slow. And if you want to narrow it down, it's a fear that the Delta variant is going to lead to more lockdowns. Yeah. And that's what's got everybody worried. Earlier today, Dr. Fauci was out on the tape, refused to answer the question if there's more lockdowns coming. That's not what the market wanted to hear.
So then, Jim, the real question that investors need to grapple with is whether they think that more lockdowns are coming or not. And don't we sort of know the answer to that? I mean, with each successive wave, we've seen less and less of a response. New York City is saying it's not going back to indoor mask mandates. Public schools, no. Look at what Randy Weingarten is saying. There's no way they're going to shut down for the third year now because they've seen how it's driving kids out of the public school system. So shouldn't we look at that information and say that any kind of shutdown risk would be way lower now than it would have been in the past?
Yes, and Los Angeles did go back to masks, and the case counts, while low, have been doubling every 7 days. If that keeps up for another 2 or 3 weeks, we might have a very different narrative by the end of the month when it comes to shutdowns. So we'll have to see how this goes. But right now, I think this market is worried that growth is stalling badly. And if you needed a story for why it's stalling, I think it's worried that the Delta variant is going to lead to some kind of a restriction in economic activity.
All right, so let me ask both of you whether you would fade or follow this move, Barry. In other words, would you be picking up some of the stocks that are selling off because of these concerns, or do you think that you should follow the lead of the markets here and say you got to move to the sidelines on some of these more sensitive names until we have better clarity on the outcome?
Well, I broke a tooth this weekend. I think the tooth fairy's not coming to visit. I think she was busy putting money in people's, stock portfolios. And, as I look at it, the situation, the key ingredients behind her delivering things has been the Fed support, the stimulus from Washington, and the strong economic growth. And as already been pointed out, I like to look at the surprises that come in on the economic reports. There aren't any positive surprises. So we are seeing that slow down, and each of those other areas have some warning signs. So I would say expect some more volatility. Yes, today's probably overdone, and we'll get a bounce tomorrow. But use this time to realign your portfolio. And, we like some stocks that are, the COVID favorites like ASML and PayPal and the like. And those types of companies, we think, in this low interest rate environment will do real well. And they've got the staying power to hold up and go forward regardless of what we're seeing overall in the market.
Shepard Smith here. Thanks for watching CNBC on YouTube.